All right, this is exercise 4-7 found on page 181. They give us the adjusted trial balance and they want us to prepare closing entries as of June 30th and then also prepare a post-closing trial balance. So at this point in the cycle, in the accounting cycle, we've already created our financial statements from the adjusted trial balance. So now we're going to prepare the closing entries, post them, close out our accounts, those temporary accounts, and then we're good to prepare the post-closing trial balance and then start in the new year. All right, so remember the 4 entries that I spoke about. So the first entry is to close out the revenue accounts. And what I have here in this spreadsheet, let me see where my cursor is. All right, what I have in this spreadsheet is the adjusted trial balance as in your textbook. I just put it right into this Excel spreadsheet. This is all the information that the problem gives you. So my revenue accounts, let me go down, right? This says revenue, but that says unearned revenue, so I know that's a liability account. Here's my capital account, drawing account. Okay, here's service revenue. So that one I want to close out. So I'm going to revenue normally has a credit balance, so in order to close it out, I'm going to make a debit entry to this account. And then just as I spoke about in class, we're going to credit the income summary account, right? The income summary account you only use at year end. And then what I want to do is just post this income summary entry to my T account down here, just so we can see it. And so I'm posting the 4,064 as revenue. All right, let's continue down. Let me go back to my trial balance. So that's the only revenue account that I had to close out. The next step is to close out the expense accounts. Well, let me see, what do I have? I have salaries expense for 1,344. I have miscellaneous expense for 256. I have supplies expense for 2,228. And then I have a salaries payable. What's this, what's your author trying to do here? This, as soon as you see the payable in the title, then you know it's a liability. So really this account should come up here and be listed with my liabilities. So they were trying to trick you there by putting that down at the end. And so let's see, all I want are these expense accounts. Now since they have a debit balance, I need to credit them. So I'm going to credit those accounts for that amount. And then what I'll debit is the income summary account. Remember, even with the visual, with the cups, I had the income summary bucket, and I threw the revenue, and I threw the expenses all in that one bucket in the income summary. So here I'm going to put a debit to my income summary of 3,828. And how do we get that number? That's the total of my expenses. If I total these all up, which I don't think you guys can see over here, but the sum says 3,828, right? My debits equal my credits. Every journal entry has a double side, double entry system. This is considered a compound entry. This is considered a simple entry. All right, finally, well, not finally, the third entry that I want to make is to close out the income summary account. So let's see, let me get my balance here. If I took the balance in this account, and my credits are greater than my debits. So what does that mean? Right, I'm not going to answer just yet. You guys could think about it. Tick tock, tick tock. Anyway, so let's see. I get a difference of 236, and since it's a balance of, it's a credit balance, then that means it's net income, right? So in order to close this out, I want to debit this for 236. And you know what? Maybe I can do this in a different color. You know what? I'll highlight it. So here I'm going to make my entry. I'll debit this for 236, and the account, I didn't want that, but that's okay. The account that I'm going to credit will be my capital account. So here's the T account for that, and I'm going to put the 236 in here, just so you see that that's where that entry is coming from. And let's go over here and I'll actually write out the journal entry. So I kind of did that backwards. First I posted it to the T account and then here I am writing it. But here's the debit to the income summary account and then the credit to the capital account for 236, and that's income. And that's why I'm adding it to my capital. Capital normally has a credit balance. Let's see, you know what I didn't do is I didn't post this capital balance to it. So let me move this down. Let's see, I'm going to insert and I'll shift the cells down, hit OK, shift cells down, OK. Why won't that take it? All right, there we go. So I'm going to put my balance here in from my capital account, the 5,000, which I failed to do from the beginning. I should have done that. 5,760. Okay. I don't know why that's doing that, but all right, we'll move it over. And then finally, the last entry that I want to make is close out any drawing account. And here I have my drawing account, and it's a debit of 300. So if that has a debit, in order to close that out, I need to credit the drawing account. So I'm going to write up my journal entry. I'll credit it for $300. And then what account do I want to debit? Absolutely, the capital account, right? So I'll debit the capital account for 300. And I'll post that here, so I'll have my 300. And the reason I'm doing the T account is so that I can carry it over to my post-closing trial balance. So let's see what is my balance in this account. I have 2 credits, excuse me. I'm going to total up my credits, right? The 5,760 plus the 236, but I want to net those credits with this debit of 300. So I'll subtract that 300 from that. And so I get a balance of 5,696. So that's the balance in my post-closing trial balance. That's the balance in the account after I close out the revenue and expense accounts and the drawing accounts. And they eventually go to this capital account. So let's see, when I create my post-closing trial balance, let's move this over now. And I don't need anything else, but what I'm going to do is put in my amounts for the cash. Oops, I don't want to replace that. Let me go back. I want all of this. Oops. And you know what? I'm going to take a different balance for the capital account. I want that, but then also be careful. I want this salaries payable account, right? They shove that to the bottom. All right, so my debit, I have my amounts in here, so I'm just carrying over the cash of 3,712. I'm carrying over the accounts receivable and the supplies. They're all debits. And then I want my accounts payable, right, of 1,792. I want my salaries payable, this figure right here, of 448. And then I want the unearned revenue of 160, right? Those are my permanent accounts. Assets and liabilities are permanent accounts. And then let's see, my capital, I'm going to take this amount right here. The 5,696 will be the closing balance in my capital account. And now if I total all this up, and it is being totaled, here's my sum figures. And so I'm in balance, 8,096, right? 8,096. And the same thing over here. All right, come on. 8,096. So I'm good. My debits equal my credits. This is my post-closing trial balance. So now I can start new in the beginning year, right? The first of the year, and it looks like my fiscal year ends June 30th. So July 1st will be the first day of my new operating cycle, and that's when I'll start recording revenue and expenses again and just start with that whole cycle again. All right, so that was exercise 4-7.